Finance is concerned with the art and science of managing money. The finance discipline considers how business firms raise, spend, and invest money and how individuals divide their limited financial resources to achieve personal and family goals. Finance is everything that has to do with managing money, including activities such as budgeting, saving, lending, borrowing, and investing. Finance, of financing, is the process of raising funds or capital for any kind of expenditure. It is the process of channeling various funds in the form of credit, loans, or invested capital to those economic entities that most need them or can put them to the most productive use. There are three broad areas in finance that have developed specialized institutions, procedures, standards, and goals: business finance, personal finance, and public finance. In developed nations, an elaborate structure of financial markets and institutions exists to serve the needs of these areas jointly and separately. The institutions that channel funds from savers to users are called financial intermediaries. They include commercial banks, savings and loan associations, and such non-bank institutions as credit unions, insurance companies, pension funds, investment companies, and finance companies. Finance, the process of raising funds or capital for any kind of expenditure. Consumers, business firms, and governments often do not have the funds available to make expenditures, pay their debts, or complete other transactions and must borrow or sell equity to obtain the money they need to conduct their operations. Savers and investors, on the other hand, accumulate funds which could earn interest or dividends if put to productive use. These savings may accumulate in the form of savings deposits, savings and loan shares, or pension and insurance claims. When loaned out at interest or invested in equity shares, they provide a source of investment funds. Finance is the process of channeling these funds in the form of credit, loans, or invested capital to those economic entities that most need them or can put them to the most productive use. The institutions that channel funds from savers to users are called financial intermediaries. They include commercial banks, savings and loan associations, and such non-bank institutions as credit unions, insurance companies, pension funds, investment companies, and finance companies. Finance describes the flow of money and how people, companies, and governments make, save, invest, borrow, and spend it. Personal finance is about budgeting, spending, borrowing, saving, and investing for the future. Corporate finance involves raising capital and issuing stock. Establishing and expanding a business, purchasing equipment, leasing machinery, and hiring staff. Public finance focuses on managing public debt, spending on public services, collecting taxes, and stimulating the economy. Finance is critical to growing wealth, making decisions, and managing risk. Finance is a broad term that describes a variety of activities, but they all boil down to the practice of managing money, getting, spending, and everything in between, from borrowing to investing. Finance also refers to the tools and instruments people use in relation to money and the systems and institutions through which activities occur. Finance can involve something as large as a country's trade deficit or as small as the dollar bills in a person's wallet. Very little could function without it, not an individual household, a corporation, or a society. Finance refers to resources, and the discipline that studies such resources, which allows an entity to gain the consumption and saving opportunity within a specified time frame, with related concepts such as income, money, currency, assets, and liabilities. As a subject of study, it is a field of business administration which involves the planning, organizing, leading, and controlling of an organization's resources to achieve its goals. Based on the scope of financial activities in financial systems, the discipline can be divided into personal, corporate, and public finance. In these financial systems, assets are bought, sold, or traded as financial instruments, such as currencies, loans, bonds, shares, stocks, options, futures, swaps, etc. Assets can also be banked, invested, and insured to maximize value and minimize loss. In practice, risks are always present in any financial action and entities. Due to its wide scope, a broad range of subfields exists within finance. Asset-money- risk and investment management aim to maximize value and minimize volatility. Financial analysis assesses the viability, stability, and profitability of an action or entity. Some fields are multidisciplinary, such as mathematical finance, financial law, financial economics, financial engineering, and financial technology. These fields are the foundation of business and accounting. In some cases, theories in finance can be tested using the scientific method, covered by experimental finance. The early history of finance parallels the early history of money, which is prehistoric. Ancient and medieval civilizations incorporated basic functions of finance, such as banking, trading and accounting, into their economies. In the late 19th century, the global financial system was formed. In the middle of the 20th century, finance emerged as a distinct academic discipline, separate from economics. The earliest doctoral programs in finance were established in the 1960s and 1970s. Today, finance is also widely studied through career-focused undergraduate and master's level programs. Finance, one of the most powerful and far-reaching forces shaping human life, yet it often operates quietly in the background of everyday decisions. At its core, finance is the discipline concerned with how money is created, managed, distributed, and used over time. It examines how individuals, businesses, and governments allocate resources under conditions of uncertainty. Although it is closely related to economics, finance is more focused on decision-making, specifically, how to invest, save, borrow, and manage risk in a world where the future is never fully predictable. To understand finance properly, it helps to see it not just as a technical field but as a living system that connects people, institutions, and entire economies. Every financial decision reflects a choice about priorities, trade-offs, and expectations for the future. Whether someone is saving a small portion of their income, a company is investing in a new project, or a government is funding infrastructure, finance is at work, guiding how resources flow and how value is created. In everyday life, finance is deeply personal. It begins with how individuals earn, spend, and save money. Personal finance includes budgeting, managing expenses, planning for future goals, and making investment decisions. These activities may seem simple, but they form the foundation of financial stability. Without a clear understanding of how to manage money, it becomes difficult to achieve long-term security or respond effectively to unexpected challenges. For many people, finance is most visible in moments of decision, choosing whether to buy something now or save for later, deciding how to pay for education, or planning for retirement. Beyond the individual level, finance plays a crucial role in business operations. Companies rely on financial strategies to grow, innovate, and compete. They must decide how to raise capital, whether through loans, investors, or internal profits, and how to allocate that capital efficiently. Financial management helps businesses evaluate opportunities, control costs, and maximize returns. Without effective financial planning, even the most promising business ideas can fail. In this sense, finance acts as both a support system and a guiding framework for economic activity. At the level of governments, finance takes on an even broader role. Public finance involves the management of national resources, including taxation, public spending, and borrowing. Governments use financial tools to provide services such as education, healthcare, infrastructure, and social protection. These decisions have far-reaching consequences, influencing economic growth, social equity, and overall quality of life. When managed well, public finance can drive development and stability. When mismanaged, it can lead to debt crises, inflation, and economic hardship. The impact of finance extends far beyond individual transactions or institutional decisions. Financial systems shape the overall structure and performance of economies. Efficient financial systems can promote growth by directing resources toward productive uses, supporting innovation, and enabling entrepreneurship. For example, when investors fund new businesses or technologies, they contribute to job creation and improvements in living standards. At the same time, financial systems can also create risks. Instability in financial markets can lead to crises that affect millions of people, demonstrating how interconnected and influential finance truly is. One of the most significant benefits of finance is its ability to create opportunities. Access to financial resources allows individuals to pursue education, start businesses, and improve their living conditions. For businesses, finance provides the means to expand operations, invest in research, and enter new markets. Financial systems also enable wealth creation through investments in assets such as stocks, bonds, and real estate. Additionally, finance helps manage risk by providing tools like insurance and diversification, which protect against uncertainty and loss. However, these benefits are not evenly distributed. One of the major challenges in finance is inequality. Not everyone has equal access to financial services, credit, or investment opportunities. This disparity can limit economic mobility and reinforce existing social and economic divides. Those without access to banking systems or financial education may struggle to build wealth or protect themselves from financial shocks. Addressing this inequality remains a critical issue in the development of fair and inclusive financial systems. Another drawback of finance is its complexity. Financial systems can be difficult to understand, even for those who interact with them regularly. This complexity can create opportunities for misunderstanding, manipulation, or unethical behavior. Individuals with limited financial knowledge may be more vulnerable to poor decisions or exploitation. At a larger scale, complex financial instruments and systems can contribute to instability if they are not properly regulated or understood. Financial crises represent one of the most serious risks associated with finance. These events often arise from excessive risk-taking, poor regulation, or speculative behavior. When financial systems fail, the consequences can be severe, including widespread unemployment, loss of savings, and economic downturns. Such crises highlight the importance of oversight, transparency, and responsible decision-making in maintaining stability. Despite these challenges, finance continues to play a central role in driving progress and innovation. By channeling resources into new ideas and technologies, finance supports advancements that can transform industries and improve lives. It also provides flexibility, allowing individuals and organizations to adapt to changing circumstances. Access to credit, for example, can help businesses survive difficult periods or invest in new opportunities. At the same time, finance is not immune to human behavior. Emotional and psychological factors often influence financial decisions, sometimes leading to irrational outcomes. Fear, greed, and herd behavior can cause market fluctuations, bubbles, and crashes. Understanding these behavioral aspects is essential for both individuals and policymakers, as it helps explain why financial systems do not always operate in predictable ways. Risk management is another fundamental aspect of finance. Every financial decision involves uncertainty, and managing that uncertainty is a key objective. Different types of risk such as market risk, credit risk, and liquidity risk must be carefully considered and addressed. Strategies like diversification, hedging, and insurance are used to reduce exposure to potential losses. Effective risk management not only protects assets but also builds confidence in financial systems. In recent years, technology has significantly transformed finance. Digital platforms, mobile banking, and financial technology have made financial services more accessible and efficient. These innovations have opened new possibilities, particularly in regions where traditional banking infrastructure is limited. However, they also introduce new challenges, including cybersecurity risks and concerns about data privacy. As finance becomes more digital, the need for updated regulations and safeguards becomes increasingly important. Globalization has further expanded the reach and influence of finance. Capital now flows across borders with ease, connecting economies and creating opportunities for international investment and trade. This interconnectedness can drive growth and development, but it also means that financial disturbances can spread quickly from one region to another. Managing this global network requires cooperation and coordination among countries and institutions. Ethics and governance are essential components of a well-functioning financial system. Trust is the foundation of finance, and it depends on transparency, accountability, and integrity. When these principles are compromised, the consequences can be severe. Ethical finance involves considering not only financial returns but also the broader impact of decisions on society and the environment. This perspective is increasingly reflected in the growing emphasis on sustainable finance. Looking toward the future, finance continues to evolve in response to changing conditions. Digital currencies, new financial technologies, and innovative investment models are reshaping how money is managed and exchanged. At the same time, issues such as climate change, inequality, and global instability are influencing financial priorities and strategies. The challenge lies in balancing innovation with responsibility, ensuring that progress does not come at the expense of stability or fairness. Financial inclusion is another critical area of focus. Expanding access to financial services can empower individuals, reduce poverty, and promote economic development. Mobile banking and digital payment systems have made significant strides in reaching underserved populations, but more work is needed to ensure that these services are accessible, affordable, and safe. Artificial intelligence and data analytics are also transforming finance by enabling more precise and efficient decision-making. These technologies can analyze large amounts of data, identify patterns, and optimize strategies. While they offer many benefits, they also raise questions about privacy, fairness, and accountability. Ensuring that these tools are used responsibly is essential for maintaining trust in financial systems. At a deeper level, finance is about more than numbers and transactions. It reflects human values, priorities, and aspirations. Every financial decision involves a judgment about what matters most, whether it is security, growth, or social impact. This makes finance both a practical tool and a philosophical framework for understanding how societies function. Time is a central element in finance. Decisions often involve balancing present needs with future goals, requiring individuals and institutions to think long-term. This can be challenging, as the future is uncertain and immediate needs often take priority. Developing the ability to plan and act with a long-term perspective is one of the most important skills in finance. Power and access are also important considerations. Those with greater financial resources often have more influence and opportunities. This concentration of power can drive development, but it can also lead to inequality if not managed carefully. Creating more inclusive financial systems is essential for ensuring that opportunities are available to a broader range of people. Cultural differences further shape how finance is understood and practiced. Attitudes toward saving, spending, and risk vary across societies, influencing financial behavior and systems. Recognizing these differences is important in a globalized world, where financial interactions often cross cultural boundaries. In practical terms, financial success often depends on simple, consistent habits rather than complex strategies. Budgeting, saving regularly, and avoiding excessive debt can have a significant impact over time. While advanced financial tools and techniques are valuable, they are most effective when built on a foundation of disciplined and informed decision-making. Adaptability is another key factor in navigating finance. Economic conditions can change rapidly, and the ability to respond effectively is essential for resilience. Whether at the individual, business, or government level, flexibility allows for adjustments that maintain stability and support long-term goals. Collaboration is becoming increasingly important in addressing complex financial challenges. Partnerships between different sectors can create more effective solutions, particularly in areas such as poverty reduction and sustainable development. This collaborative approach reflects a broader understanding of finance as a shared responsibility. At the same time, it is important to recognize the limitations of finance. While it is a powerful tool, it cannot solve all problems on its own. Social, political, and cultural factors also play critical roles in shaping outcomes. A balanced approach that integrates financial strategies with other considerations is essential for achieving meaningful and sustainable progress. Ultimately, finance is a dynamic and multifaceted field that influences nearly every aspect of life. It provides the tools and frameworks needed to manage resources, plan for the future, and respond to uncertainty. Its benefits include growth, opportunity, and innovation, while its challenges highlight the need for responsibility, education, and ethical conduct. When understood and applied effectively, finance can be a force for positive change. It can help individuals achieve their goals, support businesses in creating value, and enable governments to build stable and prosperous societies. At the same time, it requires careful management to avoid risks and ensure that its benefits are shared widely. In conclusion, finance is far more than the management of money. It is a system that shapes decisions, influences outcomes, and reflects the values of individuals and societies. By approaching finance with knowledge, discipline, and a sense of responsibility, it is possible to harness its power in ways that promote stability, inclusivity, and long-term progress. Thank you for watching this video.